Hello, everybody. So, elite disruption, elite disruptive stocks are considered to be risk-on stocks by the market, and thus risk-bad, they sell off. This is literally how the market works. Correlation goes to 1. I want to go over 4 stocks which I consider best in class in their own categories, being down today. Nonsense, absolute nonsense. Nebius, of course, was up, but Nebius is nowhere up like it should be, in my view. Also, 3 out of 4 of these stocks had very positive news today, and the market still sold them off like crazy. And so we begin this video, of course, with Robinhood. I cannot believe I can actually say that per my spreadsheet, Robinhood just became buyable today. As you know, I consider a stock to be buyable if I get under a 0.5. 0.48 for the best-in-class broker, the disruptor of all legacy finance, legacy TradFi, the big disruptor, right? More asset under management, growing asset under the management, super innovative, visionary leader. And it's down nearly 10% today. This makes absolutely no sense. In a matter of, a few months, we're down 41% on this stock. I absolutely do not understand. It seems like the market is trading Robinhood along with crypto as if Robinhood wasn't a crypto-only story. Robinhood, of course, is not a crypto-only story. It's a holistic business. It's a grand revolution in finance. It's the best broker of this generation, right? I mean, it's the best broker of the youth. Even older folks are moving to Robinhood. Robinhood is the absolute leader, and it's down 40%. It makes absolutely no sense. This risk-off sentiment, I cannot understand it, and I cannot believe what I'm saying right now, which is Robinhood just entered buyable territory. It hadn't entered this territory in years. There's no other way to say it. So this is pretty crazy, and yes, of course, it's deeply oversold, as some people say who look at technical analysis and do charts. So deeply disappointing market for risk stocks right now. Deeply disappointing. Let's move to another stock of the market, an example of the markets being entirely dumb. HIMS, in a matter of a few months, is now down nearly 58%. We had minus 10% on Friday for HIMS, and it's down another 2.5% right now. Like, I can't even fathom the ridiculousness of this. And this is despite having 2 bullish catalysts for HIMS, which is their Super Bowl ad coming up this weekend. And we know the stock usually pops whenever there's a Super Bowl ad. Their Super Bowl ad is arguably better than Rose. It's twice as long as Rose. It includes all of their new business lines, from labs to testosterone to peptides. We're all very excited about this ad, and the stock is just dumping. It's like the more you do things right, the more the market is selling off this stock. The shorts are just insane. And HIMS is now at 0.08. We're about to cross actually into 0.07. This is just about as cheap as I've seen it. For a company that is so much bigger now than it used to be. The guidance is stunning at HIMS. This stock is now trading at less than 2x sales of the forward guidance. I mean, forward guidance, of course, trading less than 2x sales, but it's ridiculously cheap. There's no other way to say it. Less than 2x forward sales. And if you look at that, we have another catalyst, of course, which is peptides are coming. Nurse Gerber has always the data before everybody, it seems. Peptides are coming, and we may have tirzepatide come. So if tirzepatide were to come on the platform, compounded tirzepatide and peptides, that would be really, really stunning. A lot of people saying they can't wait to have an actual legitimate brand, legitimate company actually sell peptides, because all of the peptides that are sold on the market are sold by, quote unquote, shady labs from China. Which is what a lot of people are claiming, right? So hopefully this comes. Lots of positive news for HIMS, and it is just crashing for no reason. Moving on to another stock. Okay, I cannot spell this out even more. The fact, Nebius has been down quite a bit. Actually, Nebius a few months ago was 130 and change, right? I don't understand why Nebius is not going back up, probably because it's risk on. Nebius is the cheapest stock that I'm presenting today in the stocks that I call no recovery. I consider the up 3% on Nebius today to be not satisfactory at all whatsoever. We're clear in risk off, and this is especially in the light that we had two big facts coming out today about Nebius. Nebius, apparently someone from Revolut posted on LinkedIn that they're partnering with Nebius. Nebius getting Revolut on board, and we know Nebius has been going after the banking industry. Revolut is nothing less than the big fintech disruptor of Europe. It's the Sofi of Europe, if you will allow me this comparison. Revolut cards are everywhere over there. And they're partnering with Nebius. And then we have another data center that they seem to be opening up in Béthune in France. So that's another big catalyst. A lot of people are concerned about actually Nebius getting the energy and getting the upcoming megawatts in order to be powering up the future. No, Nebius is shaping up to be one of the top neo clouds. That's what this company could be, one of the top neo clouds. Of course, other people will mention CoreWeave as well as their competitor, but one of the next neo clouds, and it's trading. This is the cheapest out of all of the stocks in the neo cloud business, 0.045. Right. They have an enormous contract, 19.6 billion with Microsoft. They have another huge contract with Facebook. Anyways, I cannot understand why the stock is so cheap. The market is so bearish. It's the risk off sentiment is so awful. Even though we have a new Fed chair that's coming, who's dovish, who's gonna say whatever POTUS says to do and drop the rates. Makes no sense. And the last stock that makes absolutely no sense, and this one is the only one where we just got earnings. Sofi is firing on all cylinders, absolutely firing on all cylinders. First $1 billion quarter. They increased their guidance. They're predicted to grow now next 12 months by 30%. Sofi at a 0.28 is squarely in the buy category. Sofi's goal, of course, is to be a top 10 financial institution within a couple years, hopefully. Sofi is a stock who's going to have enormous exposure in the US because of the SoFi Stadium and the upcoming sporting events that are going to take place there. The market is entirely dismissing SoFi after amazing earnings. I do not understand how SoFi is so cheap, and it's down 14% over the past 5 days. The stock popped, and then just market makers have been selling out that stock. This is another stock that has a bunch of short sellers. I cannot understand the price of these four stocks. The market is discounting the future like crazy. And I could have put over stocks in there. Like NVIDIA was down more than 3% for a bunch of the day. Think about that. NVIDIA down more than 3% for a bunch of the day. Like, what in the world? Coinbase was way down. This risk-off market is it's crazy, and it's not going to last forever, because if you look at the companies that are being bid up in the market, they are not healthy companies. They are highly indebted, highly old world companies who are being disrupted. And so the companies most at risk are those that are being bid up than the market. So no recovery just yet. This too shall pass. The 2020s continue to be an awful decade. Your job in the 2020s is to not get wiped out. Be very easy on the options. Be very easy on all of the risky moves. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.